But gold and Bitcoin. Gold has kind of stayed steady for a very long time, but has had a bump up just barely. But Bitcoin is really ripping right now.
It's been ripping.
And this is what's interesting about your theory of why it's ripping from a real estate investor standpoint.
They've both been ripping, and gold surged to an all-time high. Gold just hit an all-time high because traders were ratcheting up their bets that the Federal Reserve will cut interest rates next year. That's also what's been happening to Bitcoin too, is people go, oh, the dollar is going to go down. I've got to move out of my dollar. Boom, I'm going to put it in gold. Boom, I'm going to put it over here in Bitcoin. So the dollar fell, and this also against other currencies, over the last few weeks. And then this also happened to treasury yields as these investors have grown more confident that the Federal Reserve is going to lower rates. So we just talked about that. The 10-year treasury, it came down almost a full point, which caused mortgages to come down almost a full point. Why? Because people are starting to believe, and when they say traders, they're talking big money hedge funds. They're starting to believe the Fed is going to lower next year. And so that means the dollar's going to devalue, which lowers the yield on treasuries, which makes gold and Bitcoin more attractive. This same just applied to Bitcoin. It was a strategy that people were doing where traders started switching their investment strategies after nearly 2 years of following a different playbook. We were just talking about it. Your friends were like, hey, treasuries are cool. Treasuries are cool at 5%. As treasuries go back to their long-term, 1.9, that's no longer cool. And it doesn't feel as fun. So a bunch of money's been going into Bitcoin and gold. So why else has Bitcoin risen so much this year?
Because it went so far down. So it was a good entry point for people that want to get in. People are dollar cost averaging. A second reason it's going back up is because I think the stock market was going up. And some people think there's a correlation there.
Yes.
So those are my two guesses.
Both of those are 1000% correct. When people feel like they have more money, they put more money into alternative assets, aka gold and Bitcoin. So that always happens. 3, the scandals are dying down. We're hearing less about the FTX collapses. We haven't seen another, major exchange have a problem. Then you add in the political unrest, okay? And you add in these wars in Ukraine, Russia, Hamas, Israel. That causes more of a flight to gold, a flight to Bitcoin. And then basically the Federal Reserve overturned financial markets, okay, when they took interest rates from 0 to 5.25%. So over 500 basis points, the fastest they've ever done it in the last 30 years. So they flipped it over. So because they flipped it over, and now they're signaling, hey, we might be done. People look around and go, gold, Bitcoin, let's rock and roll. When Jerome said that we're well into restrictive territory and they're not going to raise, and then I'll bet money we're not going to get a raise again here in December, that the Fed is basically done hiking, boom, alternative assets, dollar's going to start devaluing. So in summary, believing that the Fed is done with rate hikes, that the dollar is devaluing, and that treasury yields are going down has had the opposite effect, and probably will continue to have the opposite effect on gold and Bitcoin, which caused them to just, boom, rip to their all-time highs. That's not investment advice. I don't own gold other than maybe some coins and bars, but don't actively trade that. I don't actively trade Bitcoin. I do hold it, but this is just what we're seeing because of interest rates.
So one reason Bitcoin and gold both are going up is part of technology. So more people are on social media, more people are reading articles, more people care about the economy and economics. And so you said as confidence starts growing, which is directly correlated to what people are seeing and reading. And you just said because there's not as many scandals, people feel more comfortable,
Yes.
more confident. Could the same thing potentially happen to real estate? Now, you and I are kind of like saying, hey, you guys need to get into real estate right now before the horde gets in here. But do you think come the springtime and the summer, as the narrative changes, right? Interest rates are going down right now. The number one story is homes aren't selling. House prices are way up. Interest rates are way up. Will the trajectory or the momentum momentum be even faster in 2024 if you had to guess, in terms of people returning to the market, both selling and buying?
That is a brilliant question. In 2024, I believe the consumer will react much, I'm talking 3 times faster than normal to interest rates, because what is being shown is that even though nationally we're at like 3.8 million transactions, we're not going below there. So we're at base level demand with low supply right now, and we know building permits are down, so there's less supply coming. So I think that buyer, the second that interest rates get near a number that they feel creates the affordable payment, they jump in instantly because they've already been waiting on the sidelines and the demand is clearly sitting there.